Hello everyone and welcome to UBS Trending. I'm Anthony Pastore. Volatility continues, as does inflation and a lot of uncertainty. How can you navigate this environment? And the question, where are the opportunities out there for investors? We're going to break that down right now with Michelle Schneider from MarketGauge.com and a friend of the studios. Michelle, always nice to have you. Thanks for being here.
Thank you so much, Anthony. Great to see you guys.
You too, Michelle. Michelle, you were just here with us a couple of weeks ago, and the very first question I asked you was about inflation. And it's going to be the same first question I ask you today, because it doesn't seem like a whole lot has changed, except inflation has gotten more broad. So it is the biggest concern right now, I think, for most investors. It's a cause of a lot of the volatility that we're seeing. The question is, do you think we are near the peak here?
Well, possibly in certain areas, because as you continue to raise prices in certain things, like, for example, eating out, which has become so expensive. There's been a decline there in terms of people going out for fine dining. As far as filling up their gas in cars, people are saying they're going to take less vacations. Some of the housing, of course, has cooled off, although the median prices haven't really gone down yet. But in terms of new mortgages, those are going down. And so that's why you have something like JP Morgan just announced they're firing, basically, or laying off, probably a nicer word, 1,000 people in the mortgage area of their banking business. So yeah, in certain areas like that, certainly. But in terms of supply side inflation, and particularly if we look at oil, which I know we're going to talk about, and we look at food commodities, and even some of the metal minings and things like that, where you can't just all of a sudden replace supply. It takes years. Even if the demand goes down on some of these things, these are still essentials that people need. So I think maybe we've seen a plateau, but definitely not a peak.
Yeah, I know. It seems to be that it's going to be a lot of uncertainty ahead of us. And as we know, gas prices are rising. We still have shutdowns in China. The war in Ukraine continues, even though it's not top of the headlines as it was a couple of weeks ago. But still, those are things that we're keeping an eye on. But, you know, when you look at what is happening back here in the U.S., the Fed and Jay Powell and the Federal Reserve, seemingly they're doing everything they can to help stave off this rising inflation. But the question I ask you is, do you think that they are actually doing everything they can? And if not, what else could they be doing here?
Well, I think that's really the problem, because can the Fed really control inflation? People are looking back to Volcker days when he raised the rates tremendously and put the kibosh on inflation. But it was also, we were heading into a recession at that point, and growth had been thwarted. So now we take a look at today. Obviously, the rates are higher, not nearly as high as they were even before inflation started in the 70s. And so the question is what is the Fed really going to be doing to be effective in this supply side, war side inflation that we keep talking about, other than demand destruction and really hurting and weakening the economy? So I don't really believe that the Fed has the power to stop what's happening here, and that's been in momentum in here, which really goes back to a tremendous number of years of low supply. And even if we take demand down a little bit, still demand's going to continue to be high. And what's a great example of that is even with oil, which the announcement of the tax holiday actually winds up being even more inflationary as well. So can the Fed tighten up to the point of killing inflation without killing the economy? No, and I think that's going to be their dance that they're going to continue to have to do.
Yeah. Do you think we're in danger of stagflation here?
Well, I think we're already in stagflation. I've been using that word for quite some time. So I do smile a bit when I see some of the economists finally coming out with that word. But yeah, stagflation. So what's the definition? First of all, GDP is going to be coming out. So we'll be in a technical recession, in essence, textbook recession, which is lower GDP's 2 quarters. But really what we're doing is we're stagnating here. And that also has an impact from coming out of a shutdown during the pandemic. So we haven't really had much growth other than back to normalization. And then, of course, the other part of the word stagflation is the inflation part. And like I said, I don't even really think that we have seen that getting going yet. I think that the market has knee-jerk reacted to what the Fed has done, thinking that demand destruction will stop inflation, but like I said, only parts of it. So yeah, stagflation all the way.
Right. Yeah, persistent inflation with high unemployment, although it'd be really interesting to see the jobs numbers that come out for June in the first week of July to kind of see where we're headed here. As you mentioned, there's some layoffs happening in certain segments of the economy. We see a lot happening also on the crypto side, a lot of layoffs on those kinds of companies that manage cryptos because of the performance there. So it's a really, really interesting time, Michelle. But let's talk about what's going on in the oil markets. WTI crude, it's hovering about $110 a barrel. But of course, anyone who puts gasoline in their car knows that the prices at the pump continue to soar. We just talked about this, this tax holiday for gas that Biden is proposing. National average of unleaded regular today in the U.S. is about $4.95. So the question is, what are your expectations from here? Where do we go?
Well, if you go back to the 1970s, of course, the reasons oil spiked were different. Back then, it was an embargo, but we had 3 spikes which then really triggered the inflation when we started to see gold and silver go nuts. So if we take it to what's happening now, we've really had one spike. We kind of had a test of it recently, but really we're basically just more flatlining. So let's talk about a couple of the fundamentals. Number one is oil reserves are down, no doubt about it, down about 35% from the peak. There has been talk that besides the reserves, just the amount of oil that's in the ground or in the sea, there's a question about how much of that is even left, because we're tapping into something that happened hundreds of millions of years ago, but nobody really knows how much is actually down there. But let's go even more statistic here. We'll talk about this tax break. So basically, what's happened is that people are talking about the fear of recession because of the demand destruction. And part of that, of course, is that if oil prices come down, that's because demand has also come down, which could also lead to more of a slowdown. Now, you lower the price of gas, what's going to happen? People are going to go, oh, it's not so bad, and they'll go back out and demand will rise. So now you have a situation where the good intention to try to make people feel better about filling up their cars will actually have the opposite reaction, in that it could turn out to be even more inflationary in a situation where the reserves are down. And even if he opens up, I say he, meaning the administration, opens up the Keystone Pipeline, that could still take a long time for it to really start producing any kind of oil. So in every way, shape, and form I look at this, I think that people have gotten too complacent about the idea of higher oil prices, or I should say many people, and too complacent about the idea of the super cycle of commodities, because everybody goes, they're down, never mind.
Yep. And it's interesting because I was reading a quote from President Obama back in his 2008 presidential campaign, and he basically called tax holidays nothing more than a gimmick, saying politicians actually did something. And he said, look, there's also the risk that oil companies could just offset the price of the tax by adding to the price that you have to pay at the pump anyway. So it's just trying to maybe get something done. The strategic oil reserves sounded like a nice plan, but it takes such a long time to refine that into gasoline that you could put in your car anyway. So it barely had any impact. So again, really interesting and curious to see how we go from here, Michelle. Always like your insights on what's going on in the energy markets. But here we are, right? We've got this volatility, we've got rising oil prices, inflation, etc. Where do you see opportunities here? And it's kind of hard to find them. There's small pockets here and there, but it's a tough market out there.
It is a tough market, and before I talk about opportunities, I just want to make one other point, is that both politically and also in terms of monetary policy, we're like putting Band-Aids. That's what it seems like. There's a Band-Aid going up without any real good vision in terms of what we should be doing to help the U.S. economy grow, and what we should have been doing for a long time to prevent where we are right now in terms of this high inflation, which, of course, some of it couldn't have been helped, like stimulus money. But basically, going back to this tax thing, it's more government spending in a way. If you look at it that way, it's a stimulus package. So I just wanted to mention that. So that brings me to my opportunity point. I think the fact that we have seen a huge sell-off in wheat, corn, soybeans, DBA, which is the ETF that deals with the grains and also has a component of the softs being sugar and coffee. These low prices, we've really been spying for a new opportunity to get in with a much lower risk. But also, last time, Anthony, I was with you, which was in early May, we talked about China, because President Xi is doing QE while we're doing QT. And he does not, this is praising China or President Xi, but just in general seems to have more of a vision for what he wants that country to do. They're the leader in solar energy, for example. So we still think that there's an opportunity there. It's been sort of stabilizing here within a range with the rest of the market. It does go down on our down days, but it holds up better. So we like that. And yeah, do I think we can have some kind of a summer rally where biotech might continue to be interesting, or solar energy could be interesting, or some of the really, really beat up growth stocks? ARC's been getting a little bit of a bid here. Maybe, but we think that would be short-lived because, like I said, I think you have to focus on commodities, keep watching the gold and the silver and the miners. They've also been going sideways. And at some point, it'll become more obvious that the Fed cannot really control this inflation, and that's when we can really see the super cycle take hold.
Right. Right. I mean, clearly we are in a bear market, 20% below where we were at the high of the S&P on January 3rd of this year. So it's interesting. We'll see if the traders start to buy the dip here a little bit and, you know, where we go. Plus, we know Jay Powell is speaking in testimony, so we'll have to digest some of his comments about the way forward as well. Michelle, it's always a pleasure. You always give us such great insights. We love your perspective on the markets. Please come back and see us soon. Great to have you.
Thank you so much.
Great.
To be
Michelle
here.
Schneider, thank you very much from MarketGauge.com. And for more information from us here at UBS, you can visit our website at ubs.com/views. And don't forget to follow us on social media, LinkedIn, Facebook, Instagram, and Twitter. Plus, all of our past UBS Trending episodes are available on demand and on the UBS YouTube channel. And if you have any questions about your portfolio, which probably many of you do, considering what's happening out there in the markets, please reach out to a financial advisor. Until next time, I'm Anthony Pastore. Have a great day, everybody, and remember to keep your eyes on what's trending. We'll speak to you soon.